Hello everyone, welcome back to our channel and welcome back to this video. In this video, we wanted to share with you as to how investors are flocking to ETFs amidst market turmoil and what it tells us about the shifting sentiment. Now, despite the heightened volatility, geopolitical uncertainty, and a very shaky macro backdrop, US investors have poured a record $437 billion into ETFs so far in 2025. A remarkable show of confidence in passive and active strategies alike. Even as interest rates remain elevated and equity markets experiencing wild swings, April saw the highest volatility in 5 years. Investors have used the dips as buying opportunities, redirecting cash stockpiles into equity and bond ETFs. Vanguard's ultra-low-cost S&P 500 ETF has emerged as the biggest winner, pulling in approximately $65 billion year-to-date, already halfway to setting its own annual inflow record. Let's talk about what's driving this acceleration. We'll talk about it in terms of structural shift from mutual funds to ETFs, the rise of active ETFs, the cash on the sidelines that is rotating back, and the next phase that is mutual fund and ETF hybrids. Starting with the structural shift from mutual funds to ETFs, now lower fees, tax efficiency, and greater transparency continue to accelerate the transition. This is no longer just a trend, it is now the new default. When we talk about the rise of active ETFs, now ETFs which were once a niche corner are being actively managed and now account for 30% of the year's flows, despite representing less than 10% of total ETF assets. Funds like the JP Morgan's option overlay strategy appealing to income-seeking retirees are gaining serious traction. Fidelity and others are doubling down on this format. Next, let's also discuss the cash on the sidelines that is rotating back. BlackRock's Larry Fink estimates that about $11 trillion is sitting in US money market funds. And as rate expectations shift and markets rebalance, a portion of this is being reallocated to both equity and ultra-short bond ETFs. Lastly, let's talk about the next phase, which is going to be a mutual fund or ETF hybrid. With dozens of fund managers willing to launch ETF share classes of existing mutual funds, the industry will soon unlock a new wave of inflows without building strategies from the scratch. Now the message is clear, ETFs are no longer just a cheap index play. They are a preferred vehicle for expressing a wide range of investment views from passive beta to sophisticated income strategies. Now as we head into the second half of the year, the question is not if ETF industry will break records again, it is how soon. Now that's what we wanted to share with you in this particular video. Hope you've enjoyed this video. Do stay tuned in for more. Thank you.